Every crowdfunding opportunity will have a summary of its business, and that's what we're going to take a look at now. You should get 2 or 3 paragraphs at least describing what the business does, and these are the points that you really want to be looking at. First of all, understand what stage the business is at. Very often these companies are startups, particularly if they're in rewards crowdfunding programs. But they may also be more developed than that, and they may actually be in the expansion stage. And classically, these stages go from sort of startup, you get a prototype product, they sell that product to a customer, so they prove the product has got some value, then they prove they can sell it to several customers. Once they've done that, then they're into an expansion mode because they prove that there's a market for their product. So you get this evolution, and you really need to understand where the business is positioned. Then take a good look at the product. What is this product all about? What's exciting about it? What's sexy about it? What's unique about it? Is this a product, if you were the right customer, is this a product you would find attractive to buy? Does it resonate with you? And it really needs to have something special about it if it's going to be successful, not only as a crowdfunding opportunity, but also as a business opportunity. Then take a look and see which customers the company is trying to address. Who is going to be buying this product, and why are they going to be buying it? Then understand what the channels to market are. How is the company going to sell their product to their customer? Are they going to sell it direct? Are they going to sell it online? Are they going to sell it through distribution? Are they going to sell it through a hybrid model, a range of all of these? And you need to understand the costs associated with that, because even when they're selling it direct, they may discount. If they're selling it through distribution, they have to obviously share some of the profit with the distributor. So just depending on how they get to market will depend on how successful the business is going to be. Then take a look at the competition. How difficult, how tough is that competition? And if you've got 1 or 2 very, very large competitors, so let's say, for example, you're going to produce a digital watch and you're in the market up against Apple. Ouch. Okay, that's a really big ask. Although, having said that, of course, the Pebble was very successful on Kickstarter, and that was a digital watch, but actually that came out before the iWatch came out. So you need to look very carefully at who your product is going to be going up against. Scalability in these businesses is vital, because if you're investing, particularly if you're investing in an equity crowdfund and you're going to part own the company, you want to know that this company can grow very large. And if it's a product-based company which has got great manufacturing, it's easily to manufacture or it's a software business, then scalability is great. If it's a people-based business, scalability is more difficult. So really understand how the business is going to scale. And then you need to understand the margins the company is going to earn. And bear in mind, you've got the price, you've then got the gross margin, you've then got the net margin, and you've also got to ask yourself, how much are they going to actually have to discount their product in order to get it to market? So, is the company selling B2B or is it selling B2C? Is it selling to predominantly enterprise and business customers, or is it selling to the man in the street, the consumer? And depending on how that works will impact the length of the sales cycle, and it'll also impact the ability to sell large numbers of the products. Because if you're doing a B2B sale, very often you can sell multiple units, but your sales cycle is much longer. If you're saying B2C, then you're going to have to sell smaller numbers of units to lots more people, but very often the sales cycle is much faster. And of course, all this is allied into understanding how much traction the company has got. How many customers have they actually got now? So have they proven that they can sell this thing, and have they proven that there are customers for it? So those are the sorts of things you should be trying to extract when you read the business summary. And if you can understand and grasp really what the company is doing, what the product is and how it's doing it, then that is a very good start.